well, see, 12:03 on my clock. I want to be respectful of our speakers and the attendees online right now. I just want to go ahead and quickly introduce myself. I am Mary Angie Carriles, the HR Manager of Professional Development. And for those who missed it, yes, you are in the correct place. This is a webinar. Hope is not a financial strategy, why having a back office system matters. During this webinar, you will learn how to have a system in place to treat your business as a real business with practical organizational skills. Before I formally introduce today's subject matter experts, I would like to remind everyone that you are able to use the chat to ask any questions you have throughout the whole program, and we will answer them during the Q&A portion. This webinar is also being recorded, so we're going to share that recording with you after the webinar is over. And I just asked our wonderful speakers if we could share the PowerPoint presentation, and they're also going to share that with you at the end, so be on the lookout for that email. But obviously, being here live is always a better experience, and you get to ask questions, so please stay throughout the whole program. Now let's get started. Let me introduce Amanda Lampert. She is a business consultant with formations dedicated to educating, supporting, and empowering self-employed professionals with the tools needed to make better financial decisions. Many solopreneurs struggle with the balance act of managing back office tasks while growing their business. Affirmation, we understand the challenges the self-employed face daily and have developed a solution that will give insights into your business financials and help you secure your future. Thank you for being here, Amanda. Also joining Amanda is Brian Weir, who is the Director of Formations Tax Department and an experienced tax consultant with a demonstrated history of working in the accounting industry and educating professionals new to taxation. He is a skilled in solving complicated tax reports. Now, before you guys jump into the presentation, I would like to request for you guys to share your mantras because I think it's very important and I want them to come from you guys. So if you do that before you jump into the presentation, that would be great.
Yeah, I'm happy to do that. I'm a big fan of the platinum rule, which is to treat others how they want to be treated over the golden rule, which is treat people how you want to be treated. I believe in empathy and understanding where each person is coming from. It's also a great way to be curious about one another and to learn and grow. So everything that I do when it comes to education and tax comes from the system of understanding what is important to you, what matters to you, and how can I help? Brian, what about your mantra?
Besides my personal mantra of disco is life, I
Yes.
would say that professionally, you don't know what you don't know. I remember the first time a customer said that to me, and I was like, that's a really interesting point. And over the last 15 years, I've kind of built formations and the ways that I interact with people to try to educate at least on the baseline and then help people understand how to move forward with strategies. So there's a lot out there to know and working with a professional team or even googling it, starting to educate yourself as a business owner especially will benefit you for every single year to come. So trying to acquire knowledge and learning what you don't know and asking what am I missing are all really good questions to kind of live by.
I agree. And I feel like I've learned so much working with you in our time together. You have done such wonderful work educating our teams across the board from different skill levels, and then also ensuring that every client that we work with is walking away better than we found them. We're making sure that you have something that's in your wheelhouse, even if it's not us at Formations who can help you. Our goal today is to make sure that you have a system in place because hope is not a strategy as much as we want it to be. And we want to make sure that your back office system is something that is really helping you have a predictive relationship to your taxes, which when we say predictive, that can sound a little bit abstract. So today we want to give you as many numbers as we can. And I know that we just got done with taxes, so this might This might actually also be a little bit emotional because some of you might have gotten a surprise. You might have had a tax bill that you weren't expecting. And so, really, we want to help you when it comes to understanding taxes, how the structure works, how selling another house can actually be a strategy to you. You don't have to be afraid of launching yourself into a new tax bracket because you're working harder. So, our goal today is to do some actual number crunching together. So, bear with us if it starts getting a little hard out there, throw something in the chat. Make sure that if you have any questions when it comes to taxes, deductions, strategies, that you let us know. If we can't get to it today, we'll make sure that we're able to answer it in due time. So no question is too small. If you are somebody that maybe is a little bit like me and you're afraid to ask your question to the group, then I want to encourage you to DM us so that way we can at least have that top of mind for you. And we promise to keep it anonymous and make sure that we review your question. So without further ado, should we get started, Brian?
I think that sounds like a great idea.
Okay.
Well, welcome everybody. Pleasure to meet you for all those online. We're really excited to have the second part of this series. Now that tax deadline at least is over, everyone can breathe a teeny bit. As Amanda mentioned, we're going to go over a few things today and especially go over about the back office section. And so that's when we get down into the fourth part of our agenda. So we're going to go through some information about what it means to be an individual that owns a business and that's a soloist and where the complications and pain points are for that. And then we're going to talk a little bit about federal taxes. And this is kind of the drier part of it, but it's important to illustrate as you start to advance your tax strategies, the benefits that exist for you. So we'll go through some numbers. I'll try to keep it as exciting as possible, but it is numbers. And then we'll talk about back office and predictive tax automation. So what is out there available to you? How can you leverage tools to be able to not have to do all of this in your head or at the end of the year? And then finally, we'll talk a little bit about self-employment taxes as well, because those affect all of you. If you got your big tax bill, you know that a big part of that's coming from there. And we'll go through that, plus any questions that you have along the way. So when you're a self-employed person, especially in the real estate industry, there's a lot going on. You have marketing, you have networking events, you have to manage your tax payments, which is probably the hardest thing for everyone on this call. You got to look at leads and listings and go to places. You have to track those expenses because if you don't, you're paying too much tax. And that's silly because you put money into your business by paying all these expenses. You shouldn't pay tax on those dollars. You got to manage your customer relationships or your client relationships. Hopefully the idea of retirement is out there in your mind, whether or not you're actively participating in an IRA or an SEP or a solo 401k or more plans. If you're not, start to think about those things because you're a self-employed. It means that you don't have someone behind you doing your 401k for you. So really start to think about retirement. And then of course, all the admin work. Now, admin work ranges from bookkeeping and tax and accounting all the way through customer relationships. So it just depends, answering your phone and setting up meetings and everything. So some of those things can be managed by a solution and other things are always going to be administrative on your side. But the goal is how do you spend as much time selling houses and doing the thing that you do the best and then start to take away those other layers, just like you might have a leads agent. You're not going door to door finding leads. You actually pay for a service to get your leads agent. So those are kind of the realities of being self-employed. There's a lot to do. You wear a ton of hats. You're super busy, and not everything that you do generates revenue for you. And so you want to start to peel back those layers and decide what can go ahead and create more income, even if you're having to pay for a service to get more time back in your day. So how do you proactively manage your taxes? Do you know how much your tax bill is a month before each quarter to make your payments? Do you have ideas of how much income you're going to make? Because as a real estate professional, your income curve, even every single year, if we think about the last 4 years, is completely different. And you really want to manage those things and know when you're on track or off track to adjust those payments.
I wonder too, for anybody that's on the call, if you are able to put into the chat, Do you have a tool? Do you have a software that you use? Do you have a habit that each Monday you are checking out? Okay, no, that's fair. For the record, too, we've had so many conversations with people that we know that living in your car sometimes is a reality as somebody in the real estate world. So some back office systems that I've heard are Middle Console, Home Depot Bucket. I've heard, I used to be an accountant even, Brian. We've worked with some people who once upon a time have done taxes, and it just really got to the point where they needed to leverage someone else's tools and systems. So whatever you have that you do, we want to hear it because that will help us understand where you're at and personalize this a little bit further. Okay, thank you. We got some fun
Yeah,
ones.
I see some things in there. Don't be scared. There are solutions out there. Formations is one of them, so that's great. And the goal of having these really good back office systems ultimately is to know where you're at and to protect your income. You don't want to pay more taxes than you have to, and you want to use that money as best as possible. And when we talk about taxes, especially in Texas, where everyone's joining us from except Amanda and me, you don't have state taxes in the same way, so that's like fantastic. You at least get to save there. But you do have federal income taxes and self-employment taxes if you're self-employed. And both of those have a lot of value in understanding the basics as well as how to reduce some of that exposure. So here's a lot of numbers. This is for married filing jointly, tax brackets for 2023. And then I'm going to actually focus on the single ones just because that's what our numbers are based on. So this is the single ones. Tax brackets are what's called marginal. And what that means is that for the first $11,000, you're paying 10% no matter what bracket you're in. And then as you advance into different brackets, the first amount that is below you, you're just paying a certain dollar value plus your marginal rate. So know that switching tax brackets is fantastic. But you want to dramatically reduce income as well as switch tax brackets. Because if you move from the 24% to the 22%, it doesn't mean that every dollar is taxed less, only in the amount over 95,000. So marginal means that it's not every single dollar taxed at 24%. Each part will be taxed at 10, 12, 22, and 24. So I wanted to kind of give you an example without getting lost in the nitty gritty of the math. But if you were single in 2023 and you had $163,850 after your normal business expenses, right? So just, basic gross income, you would owe $29,400 in standard federal taxes plus self-employment, but we'll get to that later in the presentation because it gets really messy if we talk about them at the same time. So this is your traditional income taxes. That's around 22%-ish if you actually do the math, a little bit less of an effective rate, but some of it's going to be taxed at 24%. And the goal is how do you get this number lower? And you can do that in a few ways, but I put together a little example of if you just do the standard stuff, which is the standard deduction, you're going to get 29,400 federal taxes. But as you add on like the standard mileage rate and maybe an IRA deduction, you actually get to drop it quite a bit into how much is due is 26,000, and you have a total of 27,400 deductions between these three different types. Now, again, there's lots of business expenses and other things, but this is the basics of how it works, is that if you do some of the basic stuff, the standard mileage rate, a traditional IRA, these are good steps to bring down your total taxes owed. And there's like $3,000 of savings there. That's fantastic. Keep an eye on this $27,400 of deductions because we're going to show you an example of how you do a few small changes to make that number way bigger. So here are some ideas. There's a lot of tax strategies out there, but some things to consider are how do I bring down my federal rate? So first, your personal deduction. You take the standard deduction, don't add up any receipts for charity, you don't add up any receipts for mortgage interest or real estate taxes. That's great. But if you go ahead and layer on itemized deductions, like the ones I just mentioned, you're actually going to get to shave off another $3,876. So make sure that you always keep track of your charity no matter what, even if you're not sure if you're going to itemize, because maybe you're into buying a house in February and you didn't expect to, or something of that nature. So keeping track of those deductions are really good, including medical expenses, but most people don't meet the threshold. Then deciding on the right vehicle use for you is important. As a business owner, you can either take the standard mileage rate or actual expenses. And now actual expenses mean a little bit more record keeping, which is important that you are keeping track of it. But you could, if you move from 6,500 of standard mileage to actually $10,000 of expenses, you could also shave off some additional tax and bring down your taxable income. And finally, retirement. Everyone's like, oh, I contribute to my traditional IRA every year. Well, $7,000 a year to retirement, even if you're young and you keep putting $7,000 a year, you're not going to have too much by the time you retire. As a self-employed individual, there's a ton of retirement programs out there. But one of the most effective and efficient ones that you can do is called the Solo 401k. SEP is fantastic, but it doesn't give you the extra 22,500 in contributions that are called employee contributions. So in this scenario where we had 150,000 after your standard deduction of 13,850, you would be able to do solo 401k contributions of 48,750. Now that's a massive amount to retirement, and you have to balance it with your cash flow needs. So maybe that's not the right number for you. But in this example, to kind of illustrate it, that would save you $11,000 in taxes. So you put in 48, you save 11,000. The biggest thing I want to call to your attention is the difference in the total deductions at the bottom. In this scenario, if you were to do these three things and these applied to you, your total deductions are going to go up to 90,000. And that's very different than the 27,000 on the previous slide. And that's where we talk about these are really no-brainers, and these are more advanced choices and making sure that they work out for you. So what happens up here is if you're at the original one, which is having a total of $27,000 in deductions, you're going to pay $26,000 in tax instead of 29,000 or 30,000, and so you save 3,252. Now, what happens when you add $90,000 at the bottom of? Amanda, can you see my mouse moving or not? Okay, great. So that's why I'm asking. So at the top section is the standard stuff, standard mileage rate, IRA contribution of 70,000, and your standard deduction. At the bottom is the example where you add in the amounts of solo 401k contributions, actual expenses, and the itemized deduction for owning your home and keeping track of all those charitable receipts. And what happens then is your deductions go up to $90,000, and that actually move your taxable income all the way down to 73,000 instead of 129 above. And that does shift your tax bracket from what was at the 24% to the 22%. And so overall, your total federal taxes there at the very bottom in red is 11,340 instead of our original example of 29 or our few standard deduction type choices of 26. So then you're getting like $18,000 in savings. And remember, I said you were going to put 40,000 into retirement, but then you're going to yield $18,000 back. Like, this is a great rate of return, and you're also really building your future. So the reason I went through all of these numbers, even though it's a lot and I talk really fast, is to really illustrate that the more advanced you can build your strategies and the more proactive planning that you can do, it can yield tremendous benefits. Going from almost 30,000 in taxes to just over 11 is an extraordinary amount of savings for a single person. Again, there's a lot of cash flow conversations here, but this is the idea behind it.
There was a great question that came up that I thought could wiggle into here, or if you think it's better somewhere else, Brian, but what about life insurance? Does this count anywhere?
It generally doesn't. Life insurance is a personal expense. There are really cool life insurance programs in there that are investment portfolios that build some post-tax dollars for growth that are fantastic, especially if you have a family that would need survivorship. But life insurance is a personal item. It's not really going to be a business expense ever, so you can't really reduce your personal income by it. But that's a good question. If you provide it to some staff members, if you had some employees, that's a different story because it's a benefit to them and you can deduct it. But even if you're an S Corp owner as your own employee, there's never really a way to use life insurance in the same way. Health insurance, absolutely. So self-employed health insurance we didn't even talk about here because it's pretty much a give me as well. You pay for insurance, you get the deduction. But if you're paying self-employed health insurance and you're not taking the deduction on your taxes, something's really wrong.
Good to know.
So we talked about federal taxes. I would be remiss if I didn't say self-employment taxes. So when we talk about self-employment taxes, your first $160,000 of net profit from your business are subject to Medicare and Social Security. After you get past 162,000, it's only subject to Medicare. So this is another layer of tax in addition to that amount that we were saying, the 11,000, that would be taxed on top of it. And the coolest thing about business deductions, so that we talked about itemized deductions, those are personal, but business deductions reduce both federal and self-employment taxes. So the more expenses that you can put into your business within reason, because you don't want to get crazy, are going to really bring down not only maybe 22 or 24% of your marginal rate, but also the extra 15.3%. And that's why if you've been self-employed for a long time, you're always like, man, I'm only at a 24% tax bracket, but I'm paying half my income in taxes. It's all about those self-employment taxes. And as we increase our business deductions by having really good record keeping, adding strategies, and keeping track of what is happening and continuing the conversation, you can start to bring down all of those taxes to a much more manageable level, as well as being prepared for them. So that's the idea behind self-employment taxes. We can talk about them forever, but today we really wanted to focus on the back office solution. But I wanted to give you a few more ideas of tax saving strategies. This list could be 16 pages, but some ideas, depending on your tax bracket, your state, and other qualifications, paying kids can help shift some income. So if you got a 16 to 22-year-old who's in school or working for you doing some of your social media, paying them is a fantastic idea. And there's a lot of ways you can save as a business expense. Working travel expenses into your strategy, so going to conferences as well as really converting those travel expenses to be personal. And on that note, converting personal expenses to business expenses, so cell phones, driving your car, business use of home, all things like that. There are advanced strategies about your home. So there's the standard $1,500 business use home deduction. There is a prorated amount based on the amount of space that you use for actual. And then there are other strategies related to your home, depending if you have a separate office space, if you have all of these different things. So investigating the choices around leveraging your home for maximizing your deductions and minimizing your income is a great idea. And just taking the standard $1,500 IRS give me is really not the most effective way. So talk to a professional and work through what the best strategy is for you. If you are married, which we gave the example of single, so that wouldn't apply to the past, but don't forget that you can also do a spousal 401k. So just because you're doing a 401k, you can also get your spouse to do it as well, which is really good, and you can put a lot more in retirement. Retirement's hard because you're giving up cash flow. So you always really, really want to balance cash flow and tax savings with what you need to pay your bills and take care of it. But retirement is probably one of the biggest savers for self-employment that they miss all the time. And then finally, I put it on here. Now, Texas is a little complicated for real estate professionals and S corporations. So make sure that you have a conversation before you go and build an LLC, and before you do anything, talk with your broker, talk with a professional around it. An S corporation could be a really good idea, but the regulations in Texas specifically really complex in nature, and you need to make sure to have a broker on the LLC agreement. So it might not be for your newer professionals in the real estate world. It may not be the first thing you want to do, but once you start to get really developed, maybe it's something that you want to move into to save some additional taxes. All right, so here at Formations, which is where both Amanda and I work, we really like to talk about predictive tax and accounting with Formations, that's what it says, but a tax for our customers. And when we're talking about predictive tax, it really means that based on some inputs from you, how much you think you're going to make. Let's look at your last 3 years. Let's kind of determine what your income curve looks like for the year. How do you understand early in the year how much taxes you expect to pay, and then build a plan to achieve those, as well as making a way for you to reduce those taxes as you sell a few extra homes or you have some extra cash flow, maybe you win the lottery, I don't know. But how do you do what are good choices to make early on in the system to have good impacts both on today and your future, rather than waiting until April 10th to get a note from your CPA that says, go ahead and do X amount of retirement. Like, put money into the market as soon as you can and reduce those taxes as you go rather than borrowing from next year in order to pay it. So we've got some screenshots here about what does Formations do. And Formations is an accounting solution as well as tax and strategy. And so we have a whole bunch of different departments. We have a customer success manager that works with you to make sure that you have all your goals defined and how are you achieving them, as well as regular check-ins. We have our bookkeeping group as well as our bookkeeping software. And this is a screenshot of that. And so, Formations, what we do is every month we go and categorize with our software all of the transactions that are easy or that we've seen from you in the past. So like Starbucks is food, MLS fees are dues and subscriptions. All of these different things are really easy to categorize. And then sometimes there's a few things that are like, oh, I can't tell you what that PayPal or Venmo payment was. And so we push what's called, you can almost see it here. It says unknown transactions behind the screen there. We push these things to you in a digital platform that say, out of your 100 transactions this month, we got everything except 4. Can you please give us some more information of that? And you can put a little note in there saying, I'm not sure, please help me, this was for a gift for a customer. Or you can categorize it yourself. And then we learn from that so that you don't have to keep doing the same thing each time. If you become an S Corp, we also do payroll, and so that, or payroll for your employees, and retirement planning. So we can advise you on how much to make, when to make it, and how much it will save you, which is really awesome. And so this is a true screenshot on the screen right now of your bookkeeping, or one of our customers' bookkeeping here. That is real transactions that you can go in and see. We
There's
also
something too that came up, Brian, that I think is really great for maybe those who already have some tools. It's also about how often you get to use those tools. In my conversations with agents, I'll hear about how open houses are happening, and then just even having enough admin time on Monday to enter in all of your contacts and to reach out and do the follow-up. It can be so much. So part of the system is making sure that things are as automated as possible. And I think that's what's really fantastic about this is if you don't already have some automated features in your office, do that. That is important to do. Some people wrote down that they have MileIQ and they have QuickBooks. These are great options for tools. The next layer is what you're about to get into, which is expert advice. So I wanted to share, I've seen QuickBooks, Hurdler, again, all amazing tools. This is not necessarily a hard pitch for Formation. So feel free to borrow from some of the advice that we're giving. If you do feel like reaching out and talking to us more one-on-one, we're here for you. So just know that these are some options for back office systems for you.
absolutely.
Yeah.
And then, of course, we like to provide P&Ls, which is like your income statement that kind of shows your income and expenses. And here you can see some screenshots of our product, which is showing you your income, your cash balances. How are you doing versus last year? Are you on track? Are you off track? So that you can make really good informed decisions. And then you also see down there in the bottom right of the screenshot your tax payments year to date. So during the year, we do a projection of your taxes for you to tell you, hey, this is how much you need to pay, and then we track, um, how much you pay throughout the year, so that you know at least how much we think you're going to owe by the end of the year, and how much additional you should pay and when, as well as our reminders. Um, I saw a message about I have a husband. He's a W-2. I have a 1099 or W-9 contractor. Do I need to file taxes separately? Most likely not. almost every person, like 99.2% of people, should always file jointly. Most tax professionals can do a quick projection for you of what it would be differently, but you're usually saving between $2,000 to $8,000 by filing jointly. So you probably should continue to do that overall, almost without question. But every once in a while, I see a reason to.
It does seem that though, when you are the the W-9, 1099, that it's a lot harder to do your portion of the taxes than it is the W-2. I have heard some stories that this is the season when the fights in the union happen. So, if it is a stressful conversation for you and you're wondering where to start and it feels a little bit too confusing, know that there's always experts around here at Formations to give you a second opinion, but also your peers. I'm seeing some great people who have some tools and strategies. I think one of the great things about this association is that it's very clear that you're not alone. Being self-employed doesn't mean you're by yourself. You're not alone. There's always something that you can do, and we're always here to help and layer on not only the tool and the numbers, but then also what do you do with that and how do I make it work for my family and for my lifestyle? There's so many great loopholes. So while some of this might feel a little bit general, we want to make sure that it casts a wide net to most of you. If you have questions about your specifics, please put them in the chat. Sign up for some time with us. Okay, I'm getting on a soapbox. You go.
No worries, Amanda.
Again.
You're fantastic. And that brings up a really good point too, is the stress that happens between January and April to get your shoebox together or finally reconcile your QuickBooks that you haven't gone with. And really what Formations tries to do, and me as a professional try to encourage, is that at least once a month, you should spend some time cleaning up the prior month. Now, if you're doing it on your own, that means you've got to probably spend a few hours doing it. But what our goal is how do we minimize that so that you have a dashboard to go into and you can do your 5 things that you need to do, report the mileage from last month, clean up some unknown transactions, and confirm some details. And then you get your financials and you can look at them and be like, oh yeah, I feel like I did make around $23,000 or $53,000 last month. And that proactive step, which Formations hopes to keep it to an hour or less a month, sometimes it's a little bit more if things get messy. It's what it is.
Mhm.
But going through it on a regular cadence and spending the time to understand your income and expenses throughout the year as compared to at the end of the year changes the stress level. But hopefully everyone can commit an hour to that type of admin work because it does take a minute to look at it and make sure that you're on track. But I mean, the 1 hour per month, like using Formations platform, or a few hours per month if you're using another platform that you're self-managing, compared to the 30 to 40 hours or not doing it on time and paying penalties and all of the stuff that comes into that, it's highly recommended. So building a system, if it's an automated back office system like ours is, if it's your own system that works for you, any way that you can monthly really clean up, or at least quarterly, but hopefully monthly, clean up those things in the past and use the system that you either have developed or you pay for so that you're not going through the stressors each year at tax time and you really know where you're at. Because I think that the real estate market over the last few years, I've been working with real estate agents for about the last 10 years in my professional career. And it was really predictive. It was very predictive until about 4 or 5 years ago. And then things started changing really rapidly. And you really need to do a check-in regularly to see how is your income going, where are your expenses at, and things of that nature.
Mhm.
So again, these are some screenshots of our application. It's like it's a website you go to and it's custom tailored to you. And inside of that application, you can like look at your business, and if you're an LLC, which is not too much for you guys because you're in Texas, but you can renew your business if necessary, and we can do some cleanup. We can optimize your tax structure and look at your financials. So financials again are like a profit and loss, a P&L, and a balance sheet to make sure that do you have enough money in the account to pay your bills, things like that. Do your bookkeeping, your accounting, and your payroll, which you may not have payroll if you're an S corp unless you have some employees.
Mhm.
Ongoing checking on your taxes once a month, where are you at, how much have you paid, how much do we think you still owe, as well as recommendations and insight. Sending out quarterly updates based on tax code law changes, what you need to be doing better, what our priority for the quarter is for business owners. Like sometimes it's about cleaning up last year in the first quarter, or in third quarter, we really push retirement. various things. I push retirement all the time, but quarterly special updates to get you going. And then one thing I haven't talked about that much that Formations does is we also do the annual preparation and filing your tax return. So most of you in Texas will be Schedule C filers. So all year long, we do the reconciliations to your business bank account. We keep track of all the income and expenses. We make sure you separate business from personal. And then when it comes to tax time, because we've been really proactive on keeping your financials up to date, your income, your expenses, where you're at, your tax payments, hopefully it really means that your tax time will be very painless because you've already had your mid-year check-in and your end of the year check-in so that you know I'm on track, I'm making more money, whatever it is. Somebody just asked what our fee is. I'm not that good at that part. I know Amanda has a little bit more insight. It depends on the services you need, number one. There are different levels of it. But Amanda, just for a general Schedule C filer with basic bookkeeping and everything like that, what's our annual fee for it?
Right. So we would be doing all of these things that Brian was talking about, and it can start at around 3,000 for a year of services, the tools, the check-ins, and including the preparations for the taxes as well and filing the Schedule C. Now, for some people, that's a great place to start, but then there are more pieces of insights and check-ins and strategies that they would like. A great example is by talking to agents as often as we do in brokers. 3/4 of the nation's wealth is in housing somewhere, right? It's in real estate. And since you are experts at evaluating the value of certain investments, sometimes a retirement program might be purchasing a property and growing your business through a rental strategy. That's something that's very lucrative for agents, and being able to protect your taxes from that perspective and having advice. That might be something that's a little bit more ad hoc. So being able to work with you on some different strategies at different levels of engagement. If you're curious, schedule some time with me so I can get to know you a little bit better. That way I'm able to give you what your fee would be, just because everybody's a little different. Like Brian said, it could depend on your family structure and options available to you. It could depend on how long you're in your career, your income level and cash flow, and different options available to you. So 15 minutes, we can figure out what some good next steps are for you. And it'll be good to know, right? If nothing else, now you know. And I think when I think about putting money away and having a back office system, the whole goal is to take the guesswork out of this and spend some time to understand your numbers so that you are not afraid to make those investments. Those P&Ls are going to be useful not only for purchasing properties for retirement, but they're also important for, like what Brian said, for your cash flow and being able to understand what to do with the money that you have left over after you've paid the bills. So really love the annual prep and filing part, and it should be a conversation today. It's the best day to start planning for 2023 taxes.
Yeah, exactly. Like planning for 2023 in November, December, or heaven forbid, next January or February. Those are very novice choices. I think that moving into a more advanced experience where you're really looking at it when things are nice and slow in the tax world and not everyone's running around like crazy, which because we just finished the deadline, everyone can take a big breath and start to think about 2023 in earnest. It's a really good way to approach it. So that's a great idea. But again, everyone's a little bit different. We do annual subscriptions, but in general, we want to make sure that you have active, proactive work going all year long. I don't know if that makes sense. So, you know, where you're going to put your energy in 2023, hopefully in being really proactive, finding a solution that works for you, whatever solution that may be. If it's a self-serve solution, like Hurdler, if it's having someone work on it, like our accountants, bookkeepers, and tax professionals, all of those are good systems. I just would recommend that you don't have no system. There's no system, super painful when it comes to the end of the year. So let's see, was there any other questions? Did we get everything so far, Amanda, before I talk about the last part of this?
I think we're doing well with questions. If there's anything else coming down the pike, then let us know. Something to always think about is the change from being a sole proprietor to an LLC for your structure, which I believe you're going to get into right now. So I think this will be really useful for everyone on the call.
Yeah, so Formations has like two primary things that we do. The name Formations is because in most states we help build LLCs and convert them to S corps and things of that nature. As I mentioned at the top of the call, Texas is a little complex in that nature, and so you really need to make sure that you're meeting the real estate. Oh, I can't remember the name off the top of my head, but I do know it. The board's rules about ownership of entities that are related to real estate, because although there's some legislation trying to change that, it's not passed yet. So if this is a little redundant, I apologize, or irrelevant for you, I apologize. But I do like to talk about it. You know, sometimes people move from Texas to other states, or they have other friends that they want to talk about. And being in the right entity structure is important if your state laws allow for it. And the big thing we want to talk about again is those self-employment taxes, that 15.3%. And here's an example of if you had net income of $88,000, just in self-employment taxes, so that's Medicare and Social Security, you're going to pay $13,464 in self-employment. And there's a cool structure out there called an S corporation, but you have to have a legal entity like an LLC or a PLLC or even a corporation in order to do it. And what that allows you to do is like take your profits and split some into salary, which is subject to Medicare and Social Security, and some into profits, which is not subject to the self-employment taxes. And when you do that, you get to really control that default amount that the IRS charges for self-employed people. Again, a lot of you in Texas, and if you're currently just an agent, you may be kind of stuck there for right now, but as you move into a broker or other things, that could change for you. And so there's a lot of numbers on here. Basically, what it's saying is if you have $88,000, you could split 3,600 into salary. Sorry, I forget you can't see my mouse. So there on the right, the 36,000 into salary and 52,000 into profits. And so at the very bottom, you have instead of 13,464 in FICA, that's the self-employment taxes that we're talking about, you only pay 5,500. And you can do a lot with that cash flow. You can invest it back into your business. You can put it into retirement to save you even more money. There's lots of cool stuff that you can do with that. This is what that S Corp really allows for. And so you would save some federal taxes as well as FICA taxes, and that would be beautiful. So again, there's a lot to talk about there, a little bit less applicable to Texas, but especially if you're in another state or you have friends in other states, the S corporation for real estate agents is an optimal tax strategy, but you may have some restrictions on that. So I won't, anyway. We want to make sure that you're avoiding time on back office tasks. Don't overpay self-employment taxes. But even though you may not be able to be an S Corp, by adding those other strategies like the 6 that I talked about or additional things, anything you can do to bring that self-employment earnings down will also bring down your self-employment taxes. So we do work in Texas because we have advanced strategies that can be put into place based on if you're married or if you have a separate office space, if you have children, there's a lot of things that you could do that save almost as much as the S Corp. So just by being in Texas, if you add advanced Schedule C strategies on top of your ordinary IRA deductions or whatever you're doing, you could save just as much as being an S Corp. So I don't want you to feel alienated in Texas that I can't be an S Corp, I shouldn't do anything special. There are absolutely advanced legal and cool strategies out there available to Schedule C filers. Okay. All right, so here's a nice little QR code. I think we're done, but if we have any other questions, we can answer them. We're done about 15 minutes early because I speak too quickly when I have too much coffee.
Also, you're very passionate about numbers.
That I am.
So that's very clear. And I think too, what in our conversations that we've had is that solutions run in a couple of different ways. At a certain point in your career, it makes a lot of sense to have those tools. But then what Brian was sharing as well, there will be a time where you need to leverage someone else's expertise because maybe those activities drain you and they keep you from the time that it would take for you to actively build the front part of your business. So back office strategy can at a certain point look like tools that you manage and that you're checking in once a month, like Brian was mentioning. And then it can also look like leveraging experts so you can maximize on the advanced Schedule C options that are available to you when you have the cash flow to them. And if you're not sure when to be having those conversations, that's exactly why we have this QR code and why we are talking today, is because knowing that there are some strategies and solutions out there and asking yourself how much time spending on this activity is worth it for me to drive where my financial goal and my financial freedom number is. At what point do I need to make a switch? That's hard and it's unique for each person. So if you have questions, please scan, let's chat. We would love to meet you and learn more about what you have going on and see if there's one or two things you could do this month that would change your 2023 tax position. The point is you're here now thinking about it, and that is really key, because when it's important to you and you address it, it can get done. And so don't let this fall to the back burner just because we got through tax season. Best laid plans. So do take some time to schedule a conversation, whether it's with us or your tax professional, where you are addressing this today and getting in on their books while they have time for you. It's been such a joy. Brian, thank you so much for this information. Thank you all for the questions. Mary Angie, I hope that you learned a lot too. You're going to be a certified enrolled agent after the time of this series that you spend with us.
I know firsthand how confusing tax can be, so I just leave it up to the professionals. So I get to worry about other things, aka my business, right?
Yes. It's not a bad strategy.
Yes. Thank you so much, Amanda and Brian. It's always a pleasure working with you guys. And I hope everyone here, gather something and start planning today instead of waiting for next year. Just to let everyone know, this webinar was being recorded. We are going to share with you the recording if you would like to share the recording with your agents, if you're a broker, or with your colleagues. I think this is very useful information that everyone in the industry can use. And we will send you the slides alongside the recording, so be on the lookout for that. If you register for this webinar, you will receive that recording with the slides. So be on the lookout for that. And just to let everyone know, next Monday, we have another webinar. This webinar will discuss the stereotypes that negatively impact real estate agents in the past and how they have done certain things to overcome these stereotypes and have a successful real estate career. So if you would like to register for that webinar, I'm going to insert the link to register in the chat, and I'll give Amanda and Brian any last minute comments before we depart.
I just hope that everyone got through tax season okay. I know me as a professional, it's definitely a little bit bruising each time. If you haven't figured out how much you owe for last year with your professional or doing it on your own, the sooner the better. I hope you all filed an extension, but especially if you didn't file an extension, file it as soon as possible. If you file an extension, make sure you pay as soon as possible to reduce those penalties and interest, but the worst penalty for not filing on time would be gone with an extension. But try not to wait till the end, and you can still open retirement for last year. If you're not doing retirement, you can still open a solo 401k or an SEP or an IRA and still get those deductions as long as you're on extension. So don't think you're stuck with your tax bill. You just need to make sure and put the money into the account as well.
And somebody did ask for my contact details, so I went ahead and threw it all in the chat anyway, except for carrier pigeon to get in contact with me. Brian's very busy and important, so thank you for spending some time with us, but I know that you've got some taxes for our clients that you got to get back into, so you'll be meeting with me, friends.
Thanks so much, guys.
Thank you.
Thank you so much. And again, don't forget to register for next Monday's webinar, and we will see you guys on Monday. Thank you.